Welcome back to our channel where we break down the most intriguing financial stats in a fun and easy to digest way. Today, we're diving deep into the metrics of a company that probably helped you with your last home project, the Home Depot. Stick around because we've got some eye-popping numbers to share that might just make you reconsider your investment strategy. Let's kick things off with the price-to-earnings ratio, or PR. The Home Depot's PR over the trailing 12 months stands at 22.62. But what does that mean? Essentially, it's the price investors are willing to pay for each dollar of earnings. For the past 5 years, the average PR has been around 21.71, so we're slightly above the average, but not by much. Looking forward, the PR is expected to be 20.91, indicating a potentially more attractive valuation ahead. Next up, the price-to-earnings to growth ratio, which combines the P/E ratio with growth expectations. The Home Depot's PG ratio is 3.01. This is a bit high, suggesting the stock might be overvalued considering its earnings growth. So, keep an eye on this one. Insider ownership is always a juicy tidbit. At Home Depot, insiders own just 0.23% of the company. That's not much, which might make you wonder how confident those in the know are about the company's future. Now, let's get into some powerhouse returns. Return on equity is a staggering 1,162%. Yes, you heard that right. This means Home Depot is incredibly efficient at generating profit from shareholders' equity. While return on assets is also impressive at 19.8%, showing how well the company uses its assets to generate earnings. And return on invested capital at 39.18%? That's top-tier performance, folks. Continuing with the earnings per share or EPS, that is another crucial metric. Home Depot's current EPS is 14.91, with a predicted growth rate of 7.5% over the next 5 years. Over the past decade, EPS has grown at a compound annual growth rate of 14.18%. That's some consistent growth right there. Free cash flow per share has also seen a very positive evolution, growing at 15.09% CAGR over the last decade. When it comes to dividends, Home Depot has a yield of 2.67%, with an impressive dividend growth rate of 17.91% over the past 10 years. And with a free cash flow payout ratio below 50%, that's music to any income investor's ears. Let's talk about margins. The operating margin is 14.21%, and the profit margin is 9.92%. These healthy margins indicate efficient management and a strong bottom line. The revenue and earnings have shown a very positive evolution over the last 8 years, aligning closely with the market performance of VOO in the last 5 years. Talk about steady growth. Debt metrics are crucial for understanding financial health. Home Depot's debt/EBITDA ratio is 2.08, and the debt/free cash flow ratio is 2.91. These figures are reasonable, indicating manageable debt levels. And let's not forget about that average price return of the last 52 weeks, a jaw-dropping 17.64%. Talk about a wild ride on the stock market roller coaster. With a market cap of $337.90 billion, Home Depot is a giant in the retail sector. Finally, analysts predict the stock price could rise to $382.82 in the next 12 months, a potential upside of 13.53% from its current price of $337.20. But here's my take. I think the fair value is closer to $326.50, suggesting it might be a bit overvalued right now. So, there you have it. Home Depot is showing strong financial performance, but there are mixed signals when it comes to its valuation. Whether you're looking to invest or just curious about the numbers behind the orange aprons, I hope you found this breakdown helpful and entertaining. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing!